earnings corner. Nestle India has posted its number. It is flashing below the screen. Let me read out the numbers for you, and as compared to ET Now's estimates, how well they have fared. I would say that we were suggesting a decent set of numbers, and if you look at the scorecard, the revenue that has come in is largely in line with what ET Now was penciling in, though there is a miss on the EBITDA and the PAT front, and margins also likely to be in line with what we were estimating. Let me read out the numbers for you then. As far as revenue is concerned, that's seeing an uptick of 5.9% on a year-on-year basis. We were expecting the revenues coming up at 6%, so it's a largely in-line set of revenue that's come in. As far as the profitability is concerned, if you look at the net profit, that's down 11.7% on a year-on-year basis, and we were expecting an uptick of 1.7% on the PAT front. So clearly there's a miss coming in as far as PAT is concerned. EBITDA is down 1.3% on a year-on-year basis, while we were expecting an uptick of 6%. The margins are seeing a downtick of 156 basis points on a year-on-year basis at 21.6%, while we were expecting stable margins. So margin is thereabouts, largely in line with what ET Now was expecting. We'll read out the details, more details coming out, but let me come to Gaurang Shah, who's now joining us, Senior Vice President, Geojit Investments, to weigh in on the numbers for Nestle India. Hi Gaurang, thank you so much for joining us today. Gaurang, we have just read out the first cut of numbers that have come out for Nestle. Tell me, how are you reading into the numbers?
Well, thank you so much for having me on the show. Good morning to all of you all. So, firstly, a disclosure from our research team. We have a fundamental positive call as far as Nestle is concerned on numbers. Whatever is reported and whatever you elaborated, slight marginal bit of disappointment, but our understanding is that the entire FMCG pack is likely to do well given the demand growth that is likely to come through because of good monsoon and, of course, whatever relief that has been given in terms of tax relief by the Honorable Finance Minister. Constraints could be there in the short to medium term because of certain issues for the FMCG pack, including Nestle. But we expect the volume growth to come in. Thanks to lower input costs and, of course, lower crude oil prices, we could have some operational efficiencies also that could possibly improve the margins going into the future.
All right. Hi, Gaurang. So this is Kanishka also joining in. It's a largely positive set of numbers coming in for Nestle. But I wanted to ask you, how would you compare Nestle's performance to the rest of its peers, given that Nestle's management has said that it is noticing stabilizing prices for edible oil and cocoa and a declining trend in coffee, there's stabilizing to modest increase in pricing of milk as well. So how would you compare the performance of Nestle to other peers like Tata Consumers, which reported its results yesterday?
So a little bit better according to what numbers have been there. But like I mentioned, as a sector, our fundamental team has a call on the positive side. And one quarter number should not be a deciding factor according to us on your long-term investments, basically. And we all know India is, and India will always remain a consumption-driven growth story. And with good monsoon and relief on the tax front, I think October onwards, there should be green shoots visible in terms of consumption and volume growth.
So, Gaurang, you're saying that there could be an improvement in the second half, perhaps when the volumes could pick up, and so can the consumption because of the tax relief that will start showing in the numbers. But what are going to be the headwinds, Gaurang, going ahead for the FMCG pack? And as you mentioned that, as compared to Tata Consumers, the numbers that came out yesterday, you see Nestle to be on a better footing. Going ahead, what can augur well for Nestle, and what are the headwinds for Nestle going ahead?
Look, the problem right now is with respect to crude oil prices and input cost. Given the geopolitical tension and, of course, the concerns on the volatility front, I think the biggest concern would be in terms of your logistic cost going up, your transportation cost going up, any kind of pressure on the input cost in terms of raw material prices. That could lead to a little bit of unpleasant surprise. So these are some unknown factors which only be known in the near term as we go into the future.
All right, thank you, Gaurang sir. Thank you so much for sharing your first thoughts about Nestle's result and the FMCG sector as a whole. But on that note, we'll let you go. Thank you so much for joining us this morning. Snehi is now standing by with the fine print of Nestle's Q1 numbers. Snehi, over to you. How are the numbers looking? Revenue and margins are in line, but EBITDA and PAT have seen a miss as compared to our ET Now poll.
Well, absolutely. So let's take a look at Nestle's Q1 earnings fine print coming in. If you take a look at what these numbers are looking like, it's largely a mixed set coming in. We had estimated a decent to muted quarter. So in line with that, standalone revenue has come in at 5,096 crore rupees, which is an uptick of 5.9% year on year, in line with our estimates. EBITDA has come in at 1,100 crores, a cut of 1.3%, a miss versus our estimates. EBITDA margin has come in at 21.6. We were expecting this number to remain stable given the last number at 21.3, so slightly better versus our estimates, but largely in line once again. It's the net profit this time around that has disappointed as well, coming in at just 659 crore rupees, a steep cut of 11.7% on a year-on-year basis. So that is a miss versus our estimates. Now, if you take a look at their segmental performance, Nestle has said that their India business has turned to volume-led growth largely across business categories. Powdered detergents and liquid beverages, they've done well, which was in line with our estimates, and it's also one of the largest growth drivers of the company. They've registered strong double-digit growth over here. Prepared dishes and cooking aids have swung back to volume growth. Maggi has done very well with a double-digit growth. Confectionery growth has seen high double-digit growth in line with our estimates. And Kit Kat is the top leader when it comes to confectioneries. Good growth coming in for the Kit Kat chocolate as well. Milk product and nutrition are lagging performance, and this is also what we had penciled in. Nestle breakfast cereals business has reported high double-digit growth. Their pet food business has also witnessed a strong performance. What the management has to that the quarter was impacted by elevated consumption prices across the commodity portfolio. They have noticed the stabilizing prices for edible oil and cocoa, and the declining trend in coffee, and price action will be taken accordingly going ahead. And lastly, the out-of-home consumption business also grew in double digits. So all in all, segmentally, while it's looking pretty okay, on the operational front, it's a miss versus our estimates coming in. All eyes are going to be on the brokerage estimates for the volume number because the company does not provide that.
All right.